Welcome back to the channel, everyone, and thank you for tuning in to another great video. Let's talk about liquidity. All right, lots of people who are getting into trading, they have a hard, maybe they know how to read the market, meaning maybe follow market structure, but they really don't understand the concept of liquidity. All right, when the market is sweeping in an area. Okay, let's talk about that because it's a very essential and an important part to trading, because first and foremost, you have to understand how the banks move, okay? We're talking about the institutions. Again, as retail traders, we don't drive the force of the market, okay? We're not pushing and pulling the market. We want to trade in the direction with the banks, okay? Because if you trade against them, this is not a game to where we are competing against our opponent. Only in the sense we want to be as wise as them and understand how they're making their moves so we can move with them, not against them, okay? All right, so if you try that, and you may get lucky, but again, if you try that multiple times, you're going to get burnt at some point. Now, what I've done here, I know you see a pink arrow and a blue arrow and a rectangle box there, especially if you're a beginner trader. Look, what I've done is I've marked off some areas I'm getting ready to discuss because I want you to understand the essential key concept about liquidity sweeps when a market has tapped into or taken out an area and then is moving to another direction, or up to another direction, I should say. So let's talk about liquidity because it's a very important key component to trading that the banks, you got to understand, that's what their aim is, and when they are placing positions on, they're aiming to put on trades because they're either going to sell when the price is high or which is at a premium area, or they're going to put on positions long at a discounted area where price is cheaper, okay? But the overall goal is basically two things: to set up traps in the market, to stop traders out, and attack or go after the areas of liquidity, okay? They create the areas of liquidity and then they're going to take it out in a sense, okay? Or at least set up traps to where liquidity is actually being formed or built based on, the positions that they put on and how they push and pull the market. And then they see that pot of money sitting there and they're going to go after it, okay? So what I'm showing you here is a trade that I took today. This was a long entry right here. I didn't post it on the Discord because I've been busy today and I really haven't had time to really do too much, okay? But I've been, kind of hand selecting certain trades that I wanted to take. But let's talk about this because I want you to correctly understand my thought process behind this, all right? Yes, the market has been bullish today, okay? We've been moving to the upside. Lots of people don't know how to trade it. But in a trending market, this is the best opportunity to trade supply and demand. Supply and demand works best, again, when the market is actually trending in one direction or the other. I wouldn't try to trade it when the market is actually ranging, okay? Meaning when you're in between a high and a low and the market's just going sideways. So what I saw was the market was making higher highs and higher lows. I'm getting into the trade now, okay? What happened was the market ran up here and took out this high here at 344 3/4. Pushed up, made another high. Pulled back, made a lower high. Pushed up, made some another high here, and it kept doing that. It made a pullback here. Now, pay close attention where this pink arrow is at, because what price did, well, I shouldn't say price, the market did. What the market did when it pulled back here, okay? Remember what I talked about before about the market sweeping areas of liquidity? Meaning it runs right below a certain area, primarily equal highs, similar highs, equal lows, or similar lows. Those are areas, okay, where liquidity is resting at in the market. So you see where the market pushed up here, pull back, lower high, pushed up, higher high, lower high, okay? But it created equal lows right there, and you've got to be able to see these and envision these areas within your mind on your charts, okay? So this pink arrow signifies an area where liquidity rests at in the market. The market pushes up. On the retracement or pullback, okay, what did it do? It swept right below an area of liquidity. These are the best opportunities to where we can look for a position or a trade to take a long position on a pullback. I'm not saying go long right here unless you're trading a liquidity sweep area, meaning once price takes out an area of liquidity, go long. What I'm talking about is wait for a break of structure once price has taken out an area of liquidity and look for a retracement or pull back to a key area of demand in this case, or it could be supply, okay? So the market pushes up, pulls back, we create that area of liquidity there, we run up, make new higher highs, it retraces back and takes out this area of liquidity here by just by a few ticks. Basically one tick, it took out this whole area of liquidity resting right here where we have equal lows, similar lows, okay? So it does its thing, takes out, they grab that money, banks, institutions, okay? You see this right here, this aggressive force to the downside, lots of selling, okay? Who do you think is doing that? The banks, the institutions. Understand that. I will repeat it again. Who do you think is doing that? The banks or the institutions? So they're grabbing this area of liquidity. This right here will be sell stop areas, okay? All right, this is areas where they are stopping traders out just to push the market back around, okay? And then they start grabbing liquidity on the top side. But basically, what they do in a sense here too is that once they run the market back up to the upside and create new highs after taking this area here out, look what happens. Pushes up, starts making higher highs and higher lows. We have a aggressive area of buying that took place here. Green candle, green candle, green candle, green candle. Though that's an area, if you pay close attention, you will see that's an area of demand. So if price takes out liquidity on the bottom end, on a retracement, and then pushes higher, okay, look for an area of demand, okay, to be created when price breaks structure back to the upside. What do I mean by breaking structure? It took out this area here at 359. So when it broke structure to the upside, we can then start to identify and locate or mark our key area of demand, okay? Because price grabbed liquidity here, okay? It ran to the upside, created demand right here. I'm going to be interested because when price comes back to this area of demand to take a long entry. So if we've taken out liquidity on the bottom end, then look for the market to start on the pullback, on the retracement to the area of demand. Look for the market to go after and capture an area of liquidity on the top end. That's how the market moves. Capturing liquidity on the bottom end, capturing liquidity on the top end, and it's going to keep doing that, pushing and pulling until while the banks or institutions are trying to capitalize on and take out those areas, key areas of liquidity. Okay, understand that. So when the market came back here to this key area of demand right here, it is demand, okay, untapped, okay, needs to fill the gaps, okay. When it got back to this key area of demand, I marked it. I'm looking above to see where we had liquidity at. Well, we have liquidity right here. If you take a look, I'm gonna show you at the top end right here. See what price pushed down here, pull back, and it starts to make, you know, as it's moving to the downside, it starts to make these little lower highs, okay? Basically stacking up and where it's making lower highs in a sense of making equal highs, similar highs, okay? Right here, this is liquidity. Price push down, pull back, push down, pull back, okay? It's making these similar highs, okay? All right, right here. So when the market retraces back here, I'm looking for the market to run back up there and take this area out. So when price got back to the key area of demand, all I do was wait for, like I always do, the break of a candle, meaning a close of a candle in the opposite direction. It got back down here to the demand. This last bearish candle, I'm looking for the next bullish candle that breaks above and closes above to go long and take it back up to the area of liquidity. That it did. It broke high. Once it broke right here at 356, okay, I'm in that trade and I'm aiming for price to take it back up to the highs, but at least taking out the areas of liquidity resting above, okay? It pushed down here, pull back, push down, similar high, push down again, pull back, similar highs. So it's making these small little similar highs as it's approaching or retracing back to the demand zone. So once it gets there, look for the rejection, take it back up, clear liquidity. That's what you look for, okay, all right? So when price is taking out liquidity in this instance, as it's moving higher, it runs back down below, it takes out liquidity, then it breaks structure. So look for a liquidity sweep or grab below, okay? Then wait for it to break structure back to the upside like it did right here. Grab liquidity, broke structure to the upside, taking out structure here. It left behind a demand area, wait for it to come back here to demand, and look for an area of liquidity that can be capitalized on back to the upside, because the banks and the institutions, they're going to aim for this area, okay? You've got to understand that concept. It is extremely important or essential part of trading, all right? Liquidity, liquidity, liquidity. I will say that again, all right? So look for those areas or sweeps to happen, and you'll see those things kind of painted on your charts if you have a keen eye and look for them. All right. Again, I want to say this. If you're interested in joining the Discord community, please take the time to go ahead and find the link to our Discord community. We are growing by the numbers daily. and join us. It's free, guys. Come over and join us. During the New York session, you know, we're on the trading floor. Excuse me. There's a channel on the Discord server called Trading Floor. That's where we're at. Posting screenshots or images of our trades that we as traders take. So we have a community filled with traders that are, again, posting entries. So also, please take the time to sub to the channel if you have not done so, okay? Look, I give a lot of information away here for free. I'm just sharing what I know, the knowledge I know, the things that I have based on experience or I have become, how should I say it, become privy to in the sense of, or spent time learning myself. So, you know, I'm sharing what I know for free, okay, guys? Because I want to see people become successful, and I want to see other inspired traders out there become successful just as well. So maybe it's someone that's starting off, maybe it's someone that's in the middle as far as maybe an intermediate trader and you're really trying to grow your success. That's what I'm here to do, is just really share my experience, my, you know, the way that I actually trade and you know, put it out there to the community. I'm not telling anyone to trade like me. You trade on the way that works for you best, okay? Trade on the way that works for you best, and whatever strategy that may be or what trading plan that you're going off of, trade it, okay? Whatever works for you, continue doing so. But I'm just here to share with you just some little bit of tidbits and hints and valuable information that I picked up along the way, and maybe it will help out someone in their trading. I appreciate everyone who's tuned in and watched today's video. I'll see you guys in the next one. Take care. If you're trading today, please be safe, and I'll see you in the next one. Take care.